Good morning, everybody. It's the 17th of June. I'm Joe Neighbour, going to be running through some charts for you on the FX markets today. Finally, we've seen some interesting moves in various markets as a result of the FOMC meeting yesterday. So in the US yesterday, the interest rate setters began discussing scaling back bond purchasing programs, which has spooked the market a little bit. There's also been discussions around when interest rates are going to start to rise, and they factored two rate increases in 2023, which is ahead of expectations, and as a result of that, we've seen some quite tasty moves in a number of markets. Primarily the dollar index, we saw over 1% move in that yesterday, and of course, being so dominant in the FX space, that has had a knock-on effect on some other markets, which we'll go into shortly on the charts and what the impact of that move is likely to mean for these other markets. So first up, got the dollar index chart. For those of you that have been watching these videos that I've been doing over the last few weeks and months, I have been talking about the potential of a bottom on the dollar index taking shape. We did see a break of the channel, as you can see highlighted here in yellow, and that was back in the early part of June. And since then we made some attempt at moving higher in a series of sort of higher highs and higher lows. We needed to get above this resistance level at 90.63, which was quite easily cleared yesterday on that eruption in the dollar index after the FOMC press conference, and immediately we rallied towards resistance at 91.43. I've got to be honest, I didn't expect any rally to happen that quickly. It caught me a little bit by surprise, but I have been expecting a move to the upside over the last few weeks or so, and what we're seeing now is a test of this downtrend resistance line, which you can see in blue. Now that has overshadowed the price going back to March last year. We haven't seen any moves above this level. At the moment we are seeing a move to the upside and above this level, but it hasn't closed above this level. So we need to see how we're going to close later on this evening and whether or not we are going to therefore see a continuation higher on the upside. So if we can get a close above this downtrend line and above this 91.43 resistance level, then I would be expecting a continuation higher towards around about 93.02. That's where there is an open gap, which is highlighted here by this red line. As you can see, prices closed higher on the 5th of April, but they subsequently opened quite a bit lower on the 6th of April, leaving a gap on the daily chart, which is yet to be filled. So naturally, we would expect gaps to eventually be filled. So maybe that would be the next target on the upside for dollar index. If we take a look at what this means on the the weekly chart just quickly for dollar index, because there's potentially something quite interesting happening here. This is the large downtrend that we've been trading within since March last year. We formed a bit of a wedge. We broke out of this wedge back in March, which is when I started thinking that potentially a bottom was taking shape. We got a move to the upside at 93.43, but it didn't stick, and then we saw a move back down to the downside, but we didn't make a new low. So the potential for a bottom to take shape is still alive on that basis. If we can break above this 93.43 level, then what I'm thinking is we would have formed actually a double bottom pattern on the charts. So highlighting both these bottoms here that I'm referring to with these arrows. It's only a potential double bottom at this stage, because in order to complete a double bottom pattern, it needs to break above 93.43. If we close above that on the weekly chart, then we can say the double bottom is completed, and then we can start projecting targets on the upside of where we believe price could go. Now to do that, we measure the move from the low to the high of the neckline, where we feel the double bottom pattern will need to break in order to confirm it. Once that's done, we project that price higher, and what we get is a price of 97.66. Now what's also interesting about this is if we take a measurement from the highs that we posted in March last year to these lows that we posted in January earlier this year, and take a look from a Fibonacci perspective about where the important levels are. So typically we'd be looking for that 38.2, 50%, 61.8% and the 78.6%. Then the 61.8% pretty much bang on marries up with this measured move of this potential double bottom pattern. So we have a bit of confluence starting to build as well in the dollar index, which for me is really quite interesting. So obviously, dollar index is pivotal in the whole of the FX market because it has an impact across the board. So keeping an eye on this. I think there is potential for a continued move higher. We are keeping an eye on the daily chart to see whether or not we can close above this trend line here in blue, and also this resistance level at 91.43. If we do, then for me the next target is the 93.02 level to close that gap. Then if we get above that 93.43 level, certainly from a more medium to long term perspective, then we can start to think that a double bottom pattern will have completed, and we can start projecting even higher prices on the dollar index. So quite interesting. Often the dollar index is seen as a bit of a safe haven as well, so that may have a knock-on impact across other markets and asset classes, for instance indices and stock markets. So yeah, lots happening now as a result of this FOMC meeting. Will these gains stick, or will they be faded into in line with the dominant trend? That is the key question that will be on everybody's mind over the coming hours to see how this market closes today, to get some indication on where we could head next. Thanks for watching. I'll be back next week, and until then, trade safe. Goodbye.